Hey everybody, hey traders, happy Monday. Welcome to the Pulver Report. It is 9 o'clock on the 3rd of May. Happy May, everybody. Let's go ahead and get started for today. Let's see here. I'm going to go ahead and get logged into my YouTube stream. We are streaming on YouTube, Facebook, Twitch, and Periscope. Let me get the chat up and running. Hopefully all of you had a fantastic weekend. Let's get to it. All right, we are live. Chat is running. Excellent. Okay, we're going to get in the charts. We have a busy week. We're going to have a lot of earnings again this week. We've got some stocks to look at. I'm taking a look at the ETFs. The FANG T-Man stocks are running. I was actually just listening to Bill Maher hating on some cryptos over the weekend, so that was interesting. We still have Bitcoin hasn't made new highs. Ethereum has cracked the 3,000 level. Dogecoin around 40 cents. I want to talk about a couple of those today. Also getting into some currencies. We had a really nice drop last week. The CAD, the Canadian dollar, was very, very strong. We're going to take a look at oil, dollar, gold, silver. And I had some setups. I actually took a trade on Friday with the pound CAD near the lows towards the end of the day. Ended up grabbing about 100 pips really quickly this week. I mean, literally, like I checked it on my phone this morning. It was mainly probably a weekly pivot. I'll take a look at the chart. But it was a nice little 100 and 110 pips or so this morning with no fuss. Just got in late on Friday, closed it out this morning. So I'll take a look at those. But we have some really good CAD setups coming. I'm still liking dollar CAD a lot. We're just need to see when that thing's going to turn. It might be 1.20. So anyway, all right. Good morning, Ed. Good morning, Wayne. Good morning, Gary. And a big shout out to my man Tim. I changed the screenshot. He was just like, dude, I don't like the yellow shirt, so I changed the image. And actually, this is a little bit more relevant. This image was taken in the last 6 months. I think the other one was a year or two old. So anyway, Tim, there you go. It's not white. It's a blue. Still a power play, but anyway, all good. So morning, David. All right, let's get into the charts. Before we do, understand this risk in trading. Please and always use trade capital only. Whether you're trading stocks, options, futures, forex, cryptocurrencies, you know that there is inherent risk in trading, and please trade accordingly. All right, equities on demand. Tyson and myself are going to be live every single day this week: Monday, Tuesday, Wednesday, Thursday, Friday. We start those sessions at 10 a.m. Eastern time. We spent a ton of time together last week. In fact, I did 4.5 hours alone on Friday. With our equities on demand students, we had about a 2-hour session. Our usual Friday, we did a VIP call, and then we did almost an hour and a half or hour and a half plus bonus session on Friday to thoroughly walk through one of our strategies for today, which is excellent because I believe that strategy is looking at 16 different setups this week. All right. What else we have here? That's me. I did a lot of changing to my profiles and handles out there in social media, mainly because I'm getting some imposters and scammers out there. So again, let me make this very clear. You will never see me soliciting of asking for money, asking for cryptos, asking for any links. Sign up. You won't see me do that. If I'm talking about anything and including links, it's probably going to be through my YouTube channel in my description of my videos. Right? I will never reach out to anybody personally. I'm never going to have some crazy campaigns on Facebook. It's like, so anyway, I'm just changing these out to real Chris Pulver, trying to make them as verified as possible. But just know that if anything's coming from me asking for money, that's never going to happen. All right. So just to let you know out there. All right. Couple playlists out there in my YouTube channel. We have the Keep It Seriously Simple video series. We have our live Pulver Report Mondays and Fridays. We have how to use a broker platform. And we have trading indicators A to Z. So you can check those out, all different playlists on my YouTube channel. Let's get into our charts this morning. I was just looking at some of the cryptocurrencies. Ripple is back up to $1.58. Like I said, Dogecoin is creeping up there, 39 cents. I know that Elon Musk hosted Saturday Night Live this weekend. I didn't have a chance to check it out. I have it on DVR, so I'll watch. But was it entertaining? Was it funny? Was it not? I guess it depends on how well that cast can write this week. But I don't know. There probably was some Dogecoin memes coming out on Saturday Night Live. But I've enjoyed it. I think the cast is kind of coming to its own and done some pretty good stuff. They always have a couple of great skits through the week and weekend updates, stuff like that. So anyway, chart alarm is set on Dogecoin at 44 cents. I have a lot of traders, investors, people reaching out to me on YouTube, reaching out to me on Facebook and asking, I have Dogecoin at 5 cents, 6 cents. What do you recommend? I'm not recommending anything. Okay. If I was in Dogecoin at 5 or 6 cents, I would be taking profit, right? Like I'd be protecting profit. I would close probably 80 to 90% of my profit position at current price. Or, I mean, look, it's an incredible run. If you're in 5 or 6 cents and it's up to 40 cents, that's 7 to 8 times your money. That's incredible. Now, could it go up to 50 cents? Sure. Why? I don't know. Could it go up to 69 cents? Maybe. Could it go up to $1? Maybe. Again, there's no, you have to remember, this is a meme coin, okay? So there's no real project attached to this. It is, I mean, it is what it is. Like, obviously, we've seen stocks do stupid stuff too. We've seen companies that are bankrupt and their stock price explodes. GameStop, not to mention GameStop, but obviously from $4 to $480, it's a little bit ridiculous. So I'm sure that coins can have some of the craziness and mania as well. You know, um, So does that make sense? So I mean, but I'm just saying because I know traders have Dogecoin. So if you're in it, if it's me, I'm taking profit, I'm protecting profit. If you want to let it run to the moon. It'd be with a portion, a partial position. But there's no way I'd take a reasonable amount on Dogecoin when, if you're looking at the kind of mass adoption of, I'm going to say real cryptocurrencies, but the majors like Bitcoin, like Ethereum. um, I just think that's a little bit more widely accepted. Um, anyway, so chart alarm set on Bitcoin. It's currently trading at 58,469, and 65,000 would be breaking the highs, and 47,000 would be breaking recent lows. Ethereum has been well on its way. There was some big news out of the European Central Bank last week. I did find it. I'm trying to think here. Let me find European Central Bank. I think I had it in a newsletter. Really LinkedIn Central Bank. Let's see here. It was a Morning Brew newsletter from last week. Okay, so here we go. This is what it was. This was from April 29th, and we have crypto Ether or Ethereum hit a record high of 2,700 or 2,714. This was last week. The spike follows Tuesday announcement that the European Investment Bank will sell bonds on the Ethereum network with the aid of Goldman Sachs, Banco Santander, and Societe Generale. Plus, Visa announced it'll settle transactions using Ethereum earlier this month. So that is why we're seeing higher highs in Ethereum. One thing I want you to keep an eye out for, though, is can you see these red lines that are attached to these recent highs? This red line is an indicator from my good friend Rob Booker. That is a Knoxville divergence indicator, and it's one that I've used as long as I've known Rob, for the last 10 plus years. It means that we have overbought conditions and we have divergence. Okay, so this, again, technically speaking, should be showing some signs of at least a correction coming. At least a correction coming. Now, there's still, you can see here, lots of support, lots of support, lots of support. Now, we might have a violent correction. One thing I want traders to recognize this week and this month is it's May 3rd, right? We have a new month, we have a new week, and we have a new pivot cluster, okay? So don't be surprised if we hit some highs, come back in, find a pivot, come back in, find a pivot. Now, we could find this as a base and build this as, okay, we have this little rally here, we pull back into the pivot, and we look for some support. We could pull back into this other trend line, still maintain these higher lows, and see if the bulls between this pivot cluster and this trend line support are going to be buying Ethereum again on the dip. All right, but I do want to measure, let's say that we drop down to the monthly pivot. Okay, let's say we drop to the monthly pivot. That would be about a 20% sell-off in Ethereum. Okay, so between 20 and, let's go to the trend line. Let's say we drop from the pivot all the way down to the trend line. We're talking about a 20 to 30% correction without changing any structure. All right, without changing any structure. So we could have a correction coming soon, especially when it looks like we have a bit of a blow-off move recently, right? So this is something to keep an eye out for. If Ethereum keeps running hot, that's great. Keep holding on, keep trailing those stop losses and profits, and see how high this thing goes before we inevitably come back down. Okay, all right, that is Ethereum. Litecoin hasn't broken the highs. We've got highs on Litecoin at 332. We have the 2018 highs around 370. We have lows around 207, I believe is my chart line there, 207, yep. Let's see, I'm in basic attention token. That is at 1.30, not above the highs, which are 1.70, not below the lows, which are at 82 cents. EOS, highs way up here at 8.87 and lows way down here at 4.37. I'll set a chart alarm at that low and just watch it run. Basic attention token, I think I just did that one. Yep, I just did that one. XLM, Stellar Lumen. This one is at 55 cents, highs at 69 cents, and lows at 39 cents. So still watching that one closely. And Ripple. Having a nice little recovery. We had our high to low sell off on Ripple. This is around $1.98. That was about a 53% sell off, but Ripple has come back up. Again, haven't broken the highs yet. So the next big step for Ripple would be to cross the $2 level. You can see that a lot of these cryptos, a lot of technicals this week to keep an eye out. We have weekly and monthly pivots. So if we have, this high, this low, this high, let's say we find the pivots. If we're looking at some type of shakeout here, okay, fine. We could have a wedge. Now, this wedge might suggest from this low to this high that the bulls would continue to run this. I kind of look at this as it's like a tuning fork. If you have this really aggressive move and it creates this type of structure, and then the market tries to calm itself down, eventually this has to break and go somewhere else. And because the structure is usually from the low to the high, I'm looking to see if we will inevitably build support and start continuing and holding that structure to the upside. So if you're still looking for bullishness on cryptos, we might have to see a bit of a wedge forming here, some indecision, and then we have another push coming later. All right, so sit tight, buckle up, set those chart alarms at those highs and lows on those cryptos. All right, let's take a look at our major indices and ETFs. This is the SPY. Pretty wild week last week. Didn't really accomplish a lot. Look at all the daily indecision bars. So tons of indecision up here on the SPY. We'll take a look at the SPY, the DIA, the QQQ, the IWM. We'll take a look at the volatility index, right? And we'll also take a look at the FANG T-Man, which I'm throwing that out there now. It used to be FANG stocks. Now there's FANG Man stocks. We're throwing in Tesla, so FANG T-Man, right? But S&P, we had Friday, Thursday, Wednesday, Tuesday, Monday. Literally all week last week was a massive indecision week. Okay, so is it more of the same, or is it with this low to high and these overstretched runs, are we going to start to see a little bit of a correction coming? Okay, one thing I noticed, if you were with me on Friday with our Equities on Demand class, our bonus session we did at 4 p.m. on Friday, we noticed we probably had 40 to 50 stocks that we looked at, and we were looking at so many stocks sitting at these massive technical support levels. Okay, something as simple as a 200 moving average, a 50 moving average, a 100 moving average. These automated trend lines that are widely accepted, you see them used all the time on Bloomberg and CNBC. We have a lot of stocks that are sitting right there after some corrections. So as an example, let me see here. I know that we have one play this week on Etsy. Okay, so we're looking at it's one of our power play strategies. Let me bring up this indicator here. There we go. Okay, so this is sitting at the 100 simple moving average. Okay, now the question is, are we going to use this support, last week's close right here from Friday? Is this going to break structure down to the 200, or is this going to hold and bounce? Okay, and I think I have some screenshots here. Let me see if I can find them from last week. We had a ton of screenshots. Maybe I just saved them in here. Let me see if I save the scans. Power play, I saved those tickers. All right, let me quickly go through this notepad. All right, so Etsy, let me just bring up a couple of them. So Wayfair, we have Etsy, we have Wayfair, PTC was another one. Okay, sitting right at that 100 simple moving average. We have FLGT. Stocks like this, okay? Really large runs, corrections that are coming back in. So, a lot of this is the reversion to the mean. If we have the 100 SMA, the 200 SMA, this has to make a choice, right? I mean, the bulls have to step up and defend these areas to maintain this trend, or we might be dealing with the in-between, which is an indecision zone where the bears or the bulls can win. So we're starting to see some alignments on stocks where if we see indecision, there's going to be some critical levels ahead. All right, now the reality is going into May, let's say that May is a very volatile month. Okay, so let's say May has an aggressive sell-off or has an aggressive rally. Fine. But you also have to remember at the end of May, June, July, August, we typically see things slow down, right? The markets slow down, volatility, daily trading ranges slow down. And if that's the case, we might be kind of bracing for some indecision in the coming months, right? But I think as we saw in April, the market still wants to push. We had FOMC last week. Jerome Powell still nice and dovish. We're talking about another stimulus plan. We're talking about taxes in the U.S. So it's enough to get the markets moving on something. I think that the the economy recovering, things showing that they're not as bad, returning to normal. These are all things that are being taken with a positive angle, looking at the markets to continue. But I still go back to what we talked about last week in the Pulver Report, and that was most of the movement, most of the drifts are being created by the strength of very few companies. The S&P 500 is really, riding the momentum of 6 stocks, 8 stocks, 10 stocks. And that's your FANG T-Man stocks, right? So Facebook has new highs at 3 and change, right? 324 is pre, 325 we closed that last week. It would not surprise me at all to see Facebook come back down and fill this gap and perhaps even have this be a high. If we have this high, we might come back down and actually form a top on Facebook. So let me take a look at my indicators. Okay, we do see high in price, disagreement. Okay, we're not quite overbought. The last time we were overbought with disagreement, we did see Facebook sell off quite a bit. All right, so it's not the same alignments, but it's pretty darn close. Now let's check this on a weekly chart. Okay, weekly chart. We're making new highs in price. Take a look at this. Can you see that we have a high in price, high in momentum, high in momentum? There's disagreement there. We also have hidden bearish divergence. Okay, on a weekly chart, if we have this stretch, shallow pullback, rally again, if we end up pausing, we could pull back down and actually start forcing some tops and bottoms. Okay, so if I'm going to pick some technicals this week and pick some technicals to start out in May, I think we might get off to a bit of a rocky start in May. We have some really great pivots below. It's easy for price to pull back, especially because we kept pushing and stretching towards new highs in April. Okay. Abraham says Coca-Cola. We can take a look at that one. Yep, we can take a look at Coke, sure. Coca-Cola. So it really hasn't budged. We played Coca-Cola earnings a few weeks back now, and didn't get filled at the price we wanted to. We were trying to get in at I don't remember what it was. Was it like 90 cents? We looked at like an earnings straddle that was like 90 cents for the debit, and we never got filled. Some traders got filled with us, but Tyson and myself did not get filled in this one. But it really hasn't budged. So the good thing is Coca-Cola, from kind of the the high to low, we are dealing with some indecision. But I would say that if we can break, I'd put a chart alarm right here. If Coca-Cola can break these highs, we should be able to get back up to these highs. And one thing I would say I am going to remain bullish on is raw materials. Commodities, raw materials are going to get more expensive. We are seeing copper and lumber. Let me go to lumber here. Look at this random length lumbers futures, LBS. Unfreaking believable. Look at this stock. Look at this. This is crazy. From 825. I mean, this is almost 100%, straight the F up. Crazy, right? And again, everybody might be looking at this chart and be like, well, it's got to drop. It's got to drop. Yeah, it does, but it's not going to change the mania that's going on right now. I mean, this is crazy, right? So lumber is going nuts. We have copper going nuts. Raw materials, gold. I mean, let's look at sugar. Okay, let's look at sugar. Sugar USD. So we have, and again, this is a CFD that a lot of non-US traders can trade. We're at 17 cents on sugar. I mean, coming off these major support levels, though, and I'm not saying that Coca-Cola is going to move based on sugar, but it makes sense. If their raw materials are getting more expensive, guess what? They're going to start charging, $2, $2.25, $2.50. Those little impulse buys at your stores where it's a Coca-Cola or it's a Coca-Cola Zero, whatever. It's not going to be $1.25, $1.50. It's going to be $2, $2.50, right? The consumers will pay that extra. So if we're coming off lows, we did break these recent highs. Sugar, to me, whether we have a pullback or not, this thing is ready to start making new highs. So could we go up, to 20 cents or 25 cents? Yep, and that's a huge increase. If sugar jumps up, let's say sugar jumps up to this previous high, that is a 30% increase. Okay, you're going to feel that at the grocery store. How much stuff has sugar in it? Right? And maybe it's not raw sugar. You still have high fructose corn syrup and all that crap, but the raw materials are getting more and more expensive, and we're going to pay for it. So my point is, lumber's crazy, copper's crazy, but the raw material trend right now is very bullish. Now, does it become a problem later? Sure. It's called inflation. So if it starts to get felt by consumers and they start, complaining, they start spending less, then things are going to have to change. We'll start to see lumber finally tops out if the real estate market settles down a little bit. In fact, let's check the 10-year note right now. Okay, the 10-year note's at 1.62. The markets, the housing markets will continue to run hot, in my opinion, as long as there is demand. This is a seller's market by far. Okay, so TNX is a 10-year note. The 30-year mortgage rates follow this pretty closely as far as what they're ticking higher, ticking lower. So we've had a bit of a pause on the 10-year note. We're on 1.6, and we're sitting around that 3.25% on the 30-year fixed mortgages. Okay, so if this settles down a little bit more, the housing market will still run pretty darn hot because there's very low inventory, there's crazy low interest rates, and people are wanting to move. And you can also get a bigger house, more value out of it because you can lock in crazy low interest rates. Now, what's going to change is when interest rates start to go to 4, 5, 6, 7, 8, 10%. And I'm not saying this happening anytime soon, but the next probably 3 to 5 years, I don't think we'll ever see 2.5% interest rates again, unless we're just going to forever be in this permanent dovish central bank policy status, right? Which I suppose is a possibility, but I feel like that ends very badly. So anyway, long story short, there's a lot of broken correlations. There's a lot of broken charts. But as a trader, we have to trade accordingly, right? There's always risk. We define that risk. We take trades. If it's, if I want to buy lumber, guess what I'm doing? If I'm going to trade lumber, do you think I'm taking swing trades on lumber, or do you think I'm just buying breakouts? Right? Look at this. If all I did on lumber was place a buy trade right here above and a stop loss below, and it blows through it. If I place a buy trade here and it breaks above, you take breakout after breakout after breakout, and people are making money trading lumber futures. Okay, eventually, does it come back down? Yes. Eventually, does it top out and start to have a nasty correction and high volatility? Yes. Does lumber end up going at some point when it's done going up? Does it come all the way back down? Probably. But for right now, it is bull flag city and simple breakout, 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 manage your risk. That's all it is. There's a lot of ways to trade it. Okay, let me go back to some of those FANG T-Man stocks. So we did Facebook. Let's go Apple. Apple is sitting at 132.09 with a pre at 131.46. If we do go a little bit lower on Apple, we are probably going to get some trades filled this week on the power play. Again, I did talk about this on Friday for equities on demand. I do see this left shoulder, head to neckline, right shoulder. If we do break down in Apple, okay, and again, this may be too early. Maybe the head and shoulders isn't going to be the real thing, but look at the yearly pivot. Okay, so if we have this neckline, which is very technically solid, right here, and we break down and find that yearly pivot, that's just a head and shoulders correction. Once we fill this correction, once we hit this measurement move or this symmetry, do I think that there's a lot of support here at $100? Absolutely. Between $100 and $80 and $60, I will happily accumulate Apple. But would I love to get a better price on this? Yes, I would. And if Apple drops and the FANG T-Man stocks drop and they're correcting, I think the entire market goes with it. So if those stocks drop, and this is, if you want simple analysis, watch your major FANG stocks, because if they start to drop, don't be surprised if the S&P and the NASDAQ and the Dow just start to drop. Don't be surprised if volatility goes up. Okay? All right, so that's Apple. Let's go Netflix. Netflix is off the lows. We have lows around 500, highs around 560. We're seeing a tighter range in Netflix. Let me go to the daily chart here. Okay, actually the weekly chart is pretty clean. Let me go to the weekly chart. That's pretty clean. So you can see a lot of indecision happening on Netflix, right? So we're seeing equal highs here, equal lows here, and we're even building some more intermediate highs and lows between 500 and 560. All right. So, Netflix was hit, I think it was 2 weeks ago, they were hit on a lack of subscribers or losing subscribers or not beating estimates. So it's still, kind of range bound. I'd love to see Netflix come down and hit this low around 470. And again, another great spot to look at buying and holding. Okay, Netflix, let's go Google. Google and Microsoft as well. Those have been just continuing higher. Look at this. Okay, this is a weekly chart. And look at the indicator I just talked about. We have a high, connect the dots. That means we have bearish divergence. Okay, Google, disagreement with momentum, overbought conditions on a weekly chart. Okay, traders, I think we need to make some decisions and think about some strategies that allow us to take advantage of if we see bearish direction. That means we're likely going to see some higher volatility, maybe some discount offers. Now, look, it doesn't mean I want to short stocks. Let me be very clear on this. Shorting stocks is a very slippery slope because, technically, does it make sense? Yes, but volatility is super high, and this market loves to sell off aggressively, V bottom, and then go up. Okay? So what I'm looking at is, do I have a way to make some money in the near term if stocks do drop? But what I'm more interested in is, do we just simply from this low to this high, do we just fall back? Do we find some corrective areas that we can buy? Would you buy and hold Google? Would you buy and own Google? I certainly would. If we came back to below $2,000 on Google, a lot of brokers now, you've got Fidelity, you got Schwab, you got Robinhood, you got all these brokers now that offer fractional shares. You could buy $500 worth of Google. If it's at $2,000, if it's $1,800, if it's $1,600, I could buy $500 at each level, right? And build my little position up on adding more to Google. So, but does the technical alignment look like we have some stocks and the market as a whole that's looking to correct a little bit? I think so. That's a big sign. Weekly chart divergence blowing off those highs. We've had 1, 2, 3, 4, 5 weeks in a row of bullishness on Google. That is our FANG. Let's go Tesla. Tesla at 709, pre-market 707. High, low, lower high. If we correct again, I would love to see Tesla hit that yearly pivot at $500. I would still buy Tesla. Same thing. I want to see a better price. Microsoft. We recently had a correction. Look at all of the overstretched condition. This is insane on the weekly chart. Okay, so highs in price, highs in price, highs in price. Disagreement. Overbought conditions. This is a weekly chart. These bigger time frames don't lie a lot. They take some time, but look at this. This is the most important thing to me. Okay, I would love to buy more Microsoft, but look at how ridiculously far we have been away from this 100 and 200 simple moving average. Look at this. Okay, I'm just going to get a measurement here. And if you are with me in my Flex trading room, we talk about this a lot with Forex, with Right Trader. The last time we have sat, I have to go back to probably 2000, right here, 2013 was the last, oh my gosh, that is nuts. 2013 was the last time we were sitting at this 200 simple moving average. And that is 1,000% ago. So let's just look at the bar counts. On a weekly chart, we're sitting at 430 bars on a 200 SMA. So look, if you want to know what I'm talking about, I'll show you a stock, right? When we stretch, we start to correct. Reversion to the mean is coming back to that 100, coming back to that 200. Okay, if you don't believe me, look at how Tesla stretched last year, right? Look at on the daily chart on Tesla. This is the same type of setup. Look at this. Do you see how we stretched? Right? Do you see how we stretched? We had the 100 SMA, the 200 SMA, and this thing just went parabolic. But what did price do? Ultimately, when it hit a high, it started to come back in and start to balance. Okay, and so looking at Microsoft, I see the same thing. Okay, so we have some daily support on Microsoft here around 149, but that weekly chart is pretty ridiculous. So I wouldn't be surprised if we put in a bit of a top here on Microsoft. I would be happy to see it break this structure. I'd be happy to see it fall into this yearly pivot. And I'd be happy to start accumulating between $200 and potentially down to $120, just level myself in to Microsoft and hold it. I don't know. So maybe this growth phase will start to top out a little bit, start to end a little bit. Okay, that's a good question. So Sidamisu says, what's the relevance of the bar count? It's just something I've seen for many, many years of, if you hear about this thing called reversion to the mean, okay, it means this. When price has stretched away from just really common moving averages, like the 50, like the 100, like the 200, you see these industry accepted simple moving averages all the time. So when price, and I'll just mark this with a P, when price is here and you have moving averages that are way down here and way far away, what price tends to do is when it hits these ridiculous extremes, look, it's just overvalued. And in order for this to find buyers again, the buyers are waiting for support. The buyers are waiting for corrections. And so this becomes a low volume drift into extremes. And then once we finally see profit taking, we start to see change of directions. We start to see price patterns up here emerge. And then the market starts to fall and come back into balance. So the bar counts, we did this, we did it, heck, we did it just last week. If I show you one of my systems here, let me bring in, I'll open up my MetaTrader 4 chart. We had a trade last week on the euro dollar. Euro dollar, I do this a lot in Forex. And so we had a 1 hour setup on the euro dollar right here. And I will show you that line. Okay, so this is just one example, but I really like to see this on 4 hour, 8 hour daily charts in Forex. And we do have several. We have some really good ones on the dollar CAD. We have some great ones on the New Zealand dollar. So this is just a 1 hour chart from last week, and traders were looking with me to short the euro dollar into that simple moving average or an exponential moving average. Okay, so the significance of the bar counts is if it goes a long, long, long time from finding it, we typically have the timing of it's going to balance. A quick reversion to the mean on the smaller time frame. If I show you this on a New Zealand US dollar, you'll see the difference on a slightly higher time frame. Here's a daily chart. Okay, do you see that the New Zealand dollar has not hit? Okay, the New Zealand dollar has not hit in a long time. This is the last time that we touched the 200 SMA, and it's way up here. And we still haven't hit it. And so I'm starting to accumulate some sell positions on this New Zealand dollar targeting that SMA. Okay. All right. All good with that? So that's the significance, right? All right. So let's keep going. We will do Amazon now. Amazon's at 3472. Again, lots of equal highs right here. Lots of equal lows right here. Are we going to hit a top? Technically speaking, it's at a great spot. If Amazon is going to start respecting this range high, we could see Amazon coming back down, forming a crown pattern or a head and shoulders pattern, coming back down into range lows. Tech could be sideways. We could see a little drop on the NASDAQ this week, the QQQ. And again, I know it's Amazon. I know Amazon's a behemoth, but the saying is low tide sinks all ships. So if everything is going to start dropping, if the tech sector, the growth sector is weighing very heavy, then we're going to see a lot of these stocks still remain sideways. And at highs, it would make sense that at highs, we start to fall a little bit, right? So again, I'll set the chart alarm. I want to see if Amazon cracked the highs. We're at 3466. It is officially open today for trading. So I'll set a chart alarm right here at around 3550. 3550 on Amazon, 3550. Highs. And I want to see if we take out recent lows, which are around 3302. Recent lows. Okay, so that's Amazon. Microsoft, we did. Tesla, we did. Netflix, we did. Nokia. Nokia bet has been hit pretty hard. NOK, $4.82. Big gap from last week on Nokia. I don't know if they beat expectations. Is Nokia one of the FANG T-Man stocks? I thought it is. If not, I mean, I don't know if the world of stocks or the index or ETFs hinge on Nokia. I do want to take a look at the Russell, though, IWM. Okay, another one that stretched quite a bit a ways. You can see here with the Russell, we're making some pretty impactful decisions here, right? Does the Russell head back up to these highs or does it head back down to the lows? I see the structure here as a potential head and shoulders. Left shoulder, head to neckline. This is starting to get more complex, but it still looks like a right shoulder is forming. If we form a right shoulder, I see the Russell dropping back down. Let's find that 100 SMA. Maybe we find the 200 SMA. Okay. So we do have some trades running. It's one of our master blaster strategies in equities on demand. We're looking for the Russell to have some type of expansion cycle. So whether it goes up or down, we don't care. We have positions for both. Make sense? All right. So that is IWM. Currencies, I'll go for another couple of minutes here today, and then I've got equities on demand coming up here at 10 a.m. Dollar CAD. One thing I want to note on some of these new months, new weeks, we have dollar CAD monthly pivot right there at 24. We have a weekly pivot at 23.46. It doesn't mean that you just jump in and buy it. Look, I still like, and I don't know why my, I'm just going to hide these moving averages. It's starting to look pretty messy here. There we go. So I still like my dollar CAD capitulation move, which is from this BOC decision all the way down. We have had like 4 to 5 straight weeks of, well, has it been that long? No, we've had like 7 or 8 straight days. 1, 2, 3, 4, 5, 6, 7, 8. We've had 8 to 10 days on dollar CAD. Now, could this drop into weekly levels? Yes. Could this drop into this 2018 low or this 2017 low? Absolutely. Is it on its way to those lows? Possibly. Is it on the right side of this trend line right now? No. So if I'm a buyer, look, and I am a buyer, I have positions in on the dollar CAD, and I'm sitting with a small position, small position, small position, and I'm buying more down here. They're all very small. But before I start adding to my winning position, I'm looking for confirmation of the right side of the trend line. This is one of my Keep It Serious and Simple videos. This is one of the best lessons I can teach traders on how to add to winning positions. Because if I'm averaging in, my goal is not to build a big position. My goal is to continue to test the levels. Test the lows, buy small, and then once we have some confirmation, I still have an established position, and then I add to my winning trade. I add to my confirmation when direction and price is actually going our way. And that is what helps us go from 1, 2, 3, 4, 5, and we have a corrective move coming, and we start to get this back up towards 129, 130, and we add to this trade, and we can make some nice profits. So everything I'm doing right now in dollar CAD is patience, in case this falls a little bit more, levels that I plan to buy it small on the left side of the trend line, and once we confirm, I will start taking some action on the right side of the trend line. But that is the critical technical need right now, is we need to break this trend line. So if this trend line stays and holds, guess what? There's no reason to start jumping in too early. Or if you are in, which I am, I'm buying it at these lows, right? If it establishes a low here, I'll probably buy it at this low. If it establishes a low here, I'll buy it at this low. I'll keep adding very small. And eventually my break even will be down here between like 2,400, 2,350, but my target is all the way back up here. My target is this, not this round number. My target is this yearly pivot. And so I can build this position small and then take advantage of when it finally confirms to make some nice profits. Make sense? So I like dollar CAD still, but patience will be required. Dollar Swiss, right? Dollar Swiss, take a look at our targets and our pivots. We have a nice monthly pivot right there, a weekly pivot right there, and some pockets. That's the whole point of me wanting to be long, in addition to this low, this high. So I'm looking for some areas to buy the dollar Swiss, start to position myself with really small trades, start to see this thing rally back up into this area. Now, this would be a conservative level, profit level. If it goes higher, then my sights are set all the way up here on the 1.8 and the 1.27. Okay, which actually is going to be a little bit higher. Check this out. It'd be right up here. Okay, the 1.8 was hit. Or we can go even, actually that's fine. So A to B, C to D, that's fine. Or you can look at this whole thing as a potential swing. I'm going to do another fib right here. So let me drag fib, low to high. I'll take the entire swing. Okay, so I'm just going to point out a couple of levels. I think that we can safely get to this 1.8 and 1.27 up here on the dollar Swiss. Right? So I do have my Price Action Pro. It's one of my robots that's helping me accumulate some small positions, and I will start adding some manual trades to at least get back to this level, target 1. If we push up and make new highs, there's a 127, there's a 1.8, 127 right here. That is a really nice area for some profit. So between 9,500, 9,650, those are some nice upper levels on the dollar Swiss. Right? So one thing, if you've been joining the Pulver report or my weekly outlooks the last couple of months, well, I should say the last probably 2 to 3 weeks, I've had a lot of the same currency pairs. This is going to be kind of my summary for the day. I like dollar CAD. Look for trendline break and confirmation for bulls. That's really important. New Zealand dollar. Looking for bearish confirmation, or equal highs to sell. I'm looking at JPY pairs. Okay, all 7 JPY pairs look like bearish setups. So I am looking for some JPY strength. Now, what's interesting is we talk about stocks. I'm looking at these divergent conditions. I'm looking at these overstretched moves. I'm looking at, it seems like a technical correction is due and possibly upon us. If stocks are going to correct, we're going to see risk-off trading in Forex. And if we see risk-off trading in Forex, we're going to see Japanese yen strength. And it could be a combination of dollar strength, Japanese yen strength, and Swiss franc strength, possibly even euro strength. But the JPY is right now technically probably one of the best looking baskets for some strength. Okay, now that being said, I'm always like really skeptical of the JPY's ability to follow through. What it does mean is we'll see an increase in volatility. Technically they do play out really nicely, but it just makes you crazy. Like the JPYs will drive you crazy. They'll push longer than you want. They'll take longer than you want. But then when they finally show up and then the JPYs does get really strong, they move really fast. And so they can be really profitable opportunities if you're paying attention, right? So other setups, I like dollar Swiss a lot. We've got targets and pockets above. I've got my 18127 level, and long term, I'm looking to be bullish on the dollar Swiss. I'll do dollar index really quickly and gold and silver. So dollar index has come off these recent lows. We did end up coming right back up towards that monthly pivot, just shy of it actually. So my question is, I think this is a really important level for the dollar index. Will the dollar index get above this monthly pivot? And if it does, then I'm looking for this to continue to push higher. Okay, if we hold right here and we have this weekly and monthly pivot cluster and we have this low taken out, we could have a corrective move coming back down on the dollar, equal lows, and then we have a chance to trade the range. So it's a bit of a toss up on the dollar this week because if we get above the pivot, then I think we stay bullish. If we get back down below to fresh lows, we're coming back down here and we look for this level to be where we buy it again. And we'll just have a big range on the dollar. Okay, but if we have a double bottom, if we hold this low, if we have a bottom here and a bottom here, this would be your high, which means we could break this high and still see a big move on the dollar over the next maybe 3 to 6 months. Right? But if it gets above this monthly target, this is 11,800. If we close above that, I look for dollar strength to continue. Gold. Okay, gold is at 1787. Really critical spot on gold. We've seen, we're challenging the channel right here. If we see price in open space, on gold, then I do think we start to get a run. I think gold looks pretty good to the upside. I think silver looks pretty good to the upside. Silver's a bit more capped than gold is, but they both look like they have room to run. We have also seen, all the other raw materials, all the other, commodities just going crazy and having a lot of upward direction. So silver is sideways at 26.46, but chart alarm is set up here at 29. I will buy silver again at $23, $22, but this is target one. If we break and go higher, I'd love to get a run from silver. I'm in at $21. If it goes to, $50 or $45, I'd be loving that. But chart alarm set at 29. Okay, let's take a quick look. It is just a few minutes into the open today. I did get filled on a couple of new positions. So I know I've got to wrap up here for Equities on Demand. If you would do me a favor, I know that Donna has said it and David has said it. I really appreciate it. If you hit that thumbs up button for me during these sessions, that helps a lot. I am recording this session. I'll post the show notes description with Equities on Demand. I'm including a free webinar if you want to check it out. If you want to join myself and Tyson every day for the week to trade stocks and options, you can do that. If you want to join me in my Flex room, I have a link for that as well. So if you want to trade Forex with me, I've got the Flex trading room. You want to play stocks and options with me and Tyson Clayton, that is the Equities on Demand sessions. Okay. Etsy, I was going to say we had some power plays got filled, right? So let me take a look and see. I've got Apple not filled, BDX not filled, ADSK not filled. Let me just go down the list here. We have Wayfair was filled. That is a vertical put spread from this week. That's a power play version 2. We have Etsy for this week, power play version 2. And that's all that I have for right now. Okay, so those are both version 2s. Do we have a version 3 filled? Etsy Power Play 2 filled. Indicators on the panel 1 and 2. Indicators right here. So if you're, all I have are pivots here. So on the top, I just have a bunch of pivots. Okay, and then down here, this is, let me go, I hope I can draw it in here. This is a momentum oscillator. Yep, I can draw that in there. And then this is a relative strength. Yep, relative strength. So that's it. And I've used those for probably the last 15 years. And I mean, that's nice, right? Yeah, no version 3 feels okay, good. So just a couple filled on version 2, which is fine. And we'll keep an eye on those for the week. But as the market's kicking off here, we are slightly higher. We're 0.38% on the SPY. It just gapped higher. It's not necessarily a bullish candle. The Dow Jones, it gapped higher and is pushing higher. The Qs gapped higher but is filling to the downside. Volatility index is off the recent lows around $16 up to around 18.4. April's monthly pivot is around $23. I would still love to see, again, even if it's just a big scare. If it's a big scare to get volatility back up to this $40, yearly pivot, I could finally close out my VIXI and VXX for some profit, but I'll keep an eye on that one. There was some pretty wild stuff last night on the Aussie. I saw the Aussie New Zealand go crazy, and it's not even showing up on this chart. My broker platform had like this massive spike all the way up to 108.05. It doesn't matter. My perfect storm had profits here, and then it sold it on the spike high and had profits there. So I closed out for about 100 pips on the Aussie New Zealand last night. Fully automated. That was just my perfect storm. But it's not reflecting this. Let me see if I can bring up Aussie New Zealand on the Oanda feed, and it shows that wick. Yeah, look at this right here. This Oanda feed, this is pretty crazy, right? A big spike all the way up to 108.11. So my perfect storm was buying here, took some profit, and then sold it, took some profit. So I will certainly take that little add-on, and then my pound CAD trade I had mentioned, and I'll let you go because I got to jump into class. I had a feeling. Now, I didn't look at the chart exactly. I was just on my phone, but I knew that when we had this crazy aggressive sell-off, that we were coming back up towards a weekly and a monthly pivot starting out the week. And so I did end up closing out on that Aussie, or that pound CAD. That was, let me go into my history here. So that trade was a nice little win. So I was in at 6971. 6971 is just off these lows and end up closing out around 71. Let's see, 7100. No, that's not possible. Where did I close it at? Oh, I closed it at 7062. Okay, so I closed it at 7062, which is just off the highs. So I just took a chunk of profit. I bought this end of day Friday before the market closed, and we had pivot here, nice oversold conditions. I bought it, made a nice little chunk of profit there. Now I still want to be in the trade. Like if this goes up here, pulls back down, I might look to buy it again and target that weekly or monthly pivot cluster. We're also starting to look at some really great support levels on this pound CAD right here. And I know I'm going a little bit long today, but that's okay. Look at all this incredible support on the pound CAD. So if all we did was drop all the way back down here, guess what? I'm looking to buy it and take it right back up. So I like this range trade on pound CAD. If it comes all the way down here, I've got a price action pro set up for this area to buy. Right? So we'll talk about that this week in Flex. Okay. All right, traders, that's going to do it for me. If you take the time to hit that thumbs up button for me, I appreciate it. Subscribe to the channel, click the notification bell. Is anybody having any issues getting into these sessions? Okay, like I'm not posting the Mondays and Fridays ahead of time. I'll tweet it, but it's like that we're live. The Pulver Report's going to go live Mondays and Fridays at 9 a.m. Eastern time, and that's the routine. If anything changes, so this Friday, I just want to make this clear. This Friday, one thing that you can all do right now, if you want to trading battle. The trading battle. There it is. If you'd like to join me on Friday morning, okay, I will be pairing off against Blake Morrow on a non-farm payroll CAD employment news. We're doing this together on Friday morning. If you want to register for that, here is the link. Great. We'll start around 8 a.m. Eastern time. This is going to be Friday, May 7th. So you can register there, and we will be, basically tag teaming the session together, trading against each other. Again, it's all in good fun, but I'll be deploying some manual strategies as well as robots. And we're going to have some fun talking through it. I think we're going to be hosted by Kathy Lean, but 8cap is the broker. great broker out of Australia that is doing a lot of amazing things. And I'm looking forward to the session. So I will not be live on Friday for the Pulver Report. What I'll do instead is I'm going to see if I can do a dual stream where I can stream this session through my channel. If I can't, then I'll save the recording and I will post this in my YouTube channel. So I'm looking forward to doing this. I've been prepping for this for the last 3-4 weeks. So you're all welcome to join. Just click on Watch Now. You can get registered for the event, and we'll start this around 20 minutes or so shy of the news on Friday. There's non-farm payroll news. I'm not even showing you this, by the way. This is what I want to show you. Okay, so this is the event. You can join me and Blake on Friday morning. Also, if you go into the calendar for this week, we have non-farm payroll on Friday. So this week here. Okay, so we have this week. We have cash rate from RBA on Tuesday. We have financial stability report from New Zealand. We have New Zealand employment for the quarter. We have economic forecast, ADP on Wednesday, oil inventories. We have a monetary policy rate decision out of the UK, Bank of England. Expected to stay the same. Monetary Policy Committee decisions and votes stay the same. Okay, just like last week, the Fed, we saw some volatility on the dollar, but a lot of these interest rate decisions are the same. Okay, even the CAD was the same, but they announced that they're going to start looking to potentially taper some of those stimulus programs. And then on Friday for the trading battle, employment news out of the CAD as well as the dollar. We're looking at 975. Wow, that's a big ask. That's way above expectation, or way above the recent trends on non-farm payroll. So, can the U.S. finally show a job report that posts over 1 million jobs? Maybe. Average earnings have not been on the uptrend though. We've seen, again, 0.2, which was a miss, 0.2, which was as expected, negative 0.1, which was a miss. So average earnings has not really kept pace with these returning jobs. Again, we're still like 7 to 8 million jobs lost from last year. So we're still on the mend. We're still on the recovery phase for jobs. And my little plan B for trading on Fridays is, you know what? The dollar takes center stage, but don't forget about the CAD. If the CAD is going to, they have no forecast here for whatever reason, but the Euro CAD, the Pound CAD, the Aussie CAD, New Zealand CAD, CAD Yen, CAD Swiss, those are all really good opportunities to see what price action takes on Friday. Cool? Yep. So Lewis, where do we find the non-fair? Look, if you want to look at the news, just look at Forex Factory. If you want to join me for that session, click on that link for the trading battle. I posted it in the chat, or just go to thetradingbattle.com and you click on Watch Now, and that's the link to register. And you can join me live on Friday. Okay, but either way, I'll record the session. I'll post it on my YouTube channel. But if you can join me live, come in and say hello. I'd love to see everybody there. Okay, all right, I'm going to take a small break. Got to get ready for Equities on Demand. Thanks for being with me today. It's going to be a busy week. Busy week in Equities on Demand, busy week in Flex. Lots of good stuff to kick off this week. Lots of new targets and pivots to talk about. All right, traders, have a great Monday. Have a great week. Talk to you soon. Bye.